Hi everybody, welcome back. I'm going to give you an update today for September 10th, 2009 as to what's going on. So the US dollar tumbled to its lowest level in nearly a year last week. And there are several important trends to explain about this greenback's weakness. First, the dollar's decline, it represents a continued reversal of the flight to safety that's occurred during the peak of the financial economic crisis between September 2008 and March 2009. The perception is increasing slowly yet steadily that the global economy is improving. This encourages investors to sell dollars and invest in riskier assets in other currencies. The second positive economic news from Asia, and to a lesser extent Europe, suggests that much of the rest of the world is on a faster recovery pace than the United States. If so many other nations will raise interest rates before the U.S. in order to prevent their economies from overheating, stronger economies and higher interest rates, they tend to strengthen currencies. The third U.S. government's massive stimulus program creates a flood of dollars, and it's boosting the supply of the greenback. So it also raises the risk of higher inflation in the future. Now, the fourth concerns with increased about the dollar's status as the world's reserve currency. While the greenback's preeminence is not immediately in doubt, it's likely that the rest of the world is increasingly, they're going to start to seek for alternatives, perhaps eventually lending to a more internationally based currency system. For example, China is on track to become the first investor in a new series of notes issued by the IMF. Now, the fifth thing is the dollar's value is declining not only against foreign currencies, but also against gold, oil, and other commodities, which investors increasingly view as a store of value and hedge against the depreciating greenback. So gold increased, it crossed the $1,000 per ounce barrier this week, just for a moment or so. This was the first time since February. Now, the dollar is now trading where it was before the collapse of Lehman Brothers almost a year ago. So accelerating global financial markets, downward spiral, and fueling the rush into the U.S. currency as a safe haven. So in 2009, the dollar declined about 4% against the euro, but much more against the bracc nations like commodity-rich Brazil, 20%, Australia, 17%, Canada, 11%. All of this is why our primary investment themes have been and will continue to be significant exposures to foreign equities, emerging markets, and this will help benefit both the faster growth abroad and the long-term decline of the U.S. dollar. So thank you so much for stopping by, and we hope you come back again tomorrow.